Kick it to the real deal today. What are we talking about? Mean reversion. And I want to talk about one specific thing to look for when attempting a mean reversion trade, a pullback trade, short off the top, buy the dip, all those good things. Why do we care about mean reversion? It's not just in sports when a team goes 10-1 to start the year and then they revert back to who they are and lose 6 of their next 7 and then disastrous playoff game. That's not what it's all about, Philly fans. It's also in trading. When a stock gets too far up too fast, it tends to have people taking profits and then gets back to a more reasonable price. You can call it a pullback. You can call it, I don't know, people go dip buying. But when you're trading a mean revert, you're not trying to buy the dip in the trend. You're not trying to short the pop in a flush. You're attempting to actually catch the bottom and go long or catch that short off the top. And I think it's a very careful thing here because if you're attempting a mean reversion trade, you are essentially you're looking to be selling highs and buying lows. That can be dangerous because you're going against the trend. That doesn't mean you can't do it. You just have to have a plan of action. So, the first thing I always tell people when looking for some kind of a big, massive mean reversion trade is if it looks boring, I'm not messing with it. And what does that mean? If a stock's move is linear, like 45 degrees up, then I don't want to mess around with it. I want something overextended for a pullback. I want something falling too far too fast for a dip. I'm going to use the most obvious example here today because, this is going to be exactly what I was talking about with Rivian in the last couple of days. Now, you look at the open drops on this stock, and you look at when it makes a low later in the day. Now, this is a very general move to the downside with a very slow recovery trade. If you are looking to catch a top and a bottom, I would much rather go against the grain where the risk to reward is going to be good. That's the first thing. So if it's overextended and it's a big move quickly to the downside, I'd much rather be taking a shot if it sets up there. The second thing you need to have is a plan of action. You cannot just assume you're going to sit on the bid. When a stock is moving that rapidly, my favorite way to get in is not saying, hey, let's go long at 16 because 16 is a round number. Wrong. When it's falling like that, I want people that are looking to short 16 to have their dreams come true, breaks underneath 16, doesn't continue any further, grab it on the way back up. Suddenly you're long at 16 with a risk to the bottom at 1593 in this particular case, and you're getting the move into the upside on up to VWAP. So the first thing is, the more parabolic it's going, the crazier the move, the more I like a false break in the other direction. False break at the high, false break at the low for the long. That sets you up. And then from here, I'll tell you, I always look to have a bit of a target for these. If it's an early morning move, you heard me say it a million times, you watch this in the morning, I'm looking for a push into VWAP. I'm scalping it into VWAP. I might hold some for the dream and then be willing to get out or reverse and all that good stuff. But it's a scalp into VWAP. I like to have a target because remember, if you are doing an extreme mean revert trade, which is a short the high, buy the low, you are going against the trend. You're not just going against any trend, you're going against a big trend in the other direction. That's the idea behind the trade. You're looking to catch that top. The other thing that you should be considering when you do a mean reversion trade is put yourself in the shoes of the buyers if you're selling or the sellers if you're buying. That's the other point. I'll give you a bonus point here because if you were looking to short, say something like ARM, which I know made a big move, 71 to 75, I know because I was in it. When it got to that 75 resistance, if you're looking for the short, the other thing you can do here is think like the longs are thinking. This moves 2 moves to the upside, higher lows, but then it puts in a lower high. Anybody that's in that long does not want to see a lower high. So there's 2 ways you can do it. You can get in on that first move, maybe you want it in front of 75, or you allow it to show you that secondary level. It's already given you top to VWAP. Now you get a lower high into VWAP. So you can get that first spike play, which I like the false break. If it breaks a high and then you get the reversion because you've trapped some people that have gone long through the high of the day, or if it breaks the low, some people have gone short through the low of the day, all the better. But if you don't take that trade, the other type of mean revert is seeing an obvious top, then seeing a lower high where you can work off that top and then get your target right back in, because the longs are thinking what I was thinking long. Bounce off VWAP doesn't make the higher low. I want to be getting out of dodge and waiting for it to get to VWAP again, where you try it again, and then it works down. So that's two ways that you can play a mean reversion trade. I don't think you'll want them to be boring when you're looking for that mean revert. And ultimately, I still would say the trend is your friend. You know, in some cases, it's great to be able to catch a top short or catch a long at the absolute bottom. But remember, in the general sense, the trend is going to be your friend. There's something you want to have in your toolbox for these pullback trades or these dip buys. But at the end of the day, it's not a stock or it's not a trade that you want to fight. If you're playing that reversion, it's supposed to get there, get in, and work right away. I don't want to see fighting around at these levels. If Rivian had not worked right away, you got to be able to get a dodge. You want that spike back up. It's like it refuses, traps a short, and then starts to work immediately. If it's not working immediately, then you didn't catch a bottom. And you got to be able to accept that really fast, especially in these kinds of moving markets. So that's the real deal. And there are plenty of moves as the market's falling in right now as we speak. Hey, the trend ended up being your friend. But if you can catch that quick move in the revert, you got to know what to look for. False breaks, higher lows, lower highs if you're patient. But as always, make sure you back test your trades. Be patient with your entries. It's better to, you got to be willing to miss the trade to make the trade. And that's especially true when it comes to this going against the grain.